how to fill out the 2021 W-4 form for a couple who is married and they both have a side hustle. This was a video that was requested by one of our subscribers on YouTube, so we wanted to take full advantage of delivering on that. Now, in this scenario, we won't include children, but we just want to paint a picture of how it works if a couple both have side hustles. So we live in a day and age where people are now understanding the importance of not just having one stream of income or not solely relying on their job. So as a result, many people are adopting side hustles, or really just a home-based business, just to make it all the way plain. And there's power in that, and as it relates to this form, this W-4, as well as you having a job and keeping more of your money. So hopefully this video paints a picture and also gives you some insight of why you want to understand how to fill out this form, especially if you have a side hustle, because it helps you maximize your tax liability, or helps you minimize your taxes. That being said, what up? You got Mr. Smith, 0.5 of Mr. and Mrs. Smith, and in this brief video, I want to give you a scenario of a couple who is married, filing jointly, and they both have side hustles. I'm going to try not to make this video too lengthy, so I'm just going to kind of put the numbers together, and you put it in based on your scenario. Make sure you have your check stubs for both you and your spouse handy, so that way the information that's put in are more accurate. And the examples that I'm going to give as it relates to the side hustle are going to be estimates. This is an estimate altogether. But what's the importance of having a side hustle? For one, if you have a side hustle, many people only think about the money that can be earned from having a side business, but what they miss is the tax deductions that come along with it. If you have a business on the side, there are hundreds of tax deductions that you qualify for. Things like your internet, your cell phone, marketing material, travel as it relates to business miles that you may be putting on your vehicle when you're traveling to different events or marketing your business. So it's a lot of different things. And I went over a common tax deduction scenario. Hopefully you catch that video, because the common tax deductions broke down how certain fees that you may be paying, shipping, travel, like I just mentioned, as well as things that you're already spending money on. Are you paying your kids? You could possibly hire your kids. And it's thousands upon thousands of dollars that can be saved just from having and understanding the common tax deduction. There are over 400 tax deductions that a home-based business qualifies for, but all you need is a strong 12 in order to be dominant. And sometimes it can be more than that or less than that, but on average, people are able to write off an extra $6,000. $6,000 on their taxes. That's equivalent to a person having a child, carrying a child, even if they don't have children. So understand the power in that, because it allows you to keep more of your tax liability, or more of your money, and that extra cash flow can be put towards getting out of debt faster, put towards investing, put towards saving for the future, just put towards freedom as it relates to whatever it is that you're dealing with. So I wanted to cover that on the front end so that I'm not doing that and making the video longer than it has to be. So let's dive in. So if you're familiar with this page, basically this is the estimator. The tax withholding estimator can be found on the IRS website, or you can copy this whole domain here and type it into your browser and get access to it. Like I stated, make sure you have your check stubs for you and your spouse. If this scenario fits you, then you go to this page right here where it says use the tax withholding estimator. And I love this estimator because it eliminates the fear that many people used to have when it came to adjusting the W-4 and not knowing what to expect. Towards the end of this, they'll let you know what to expect. Now, this is what I want you to understand. I'm going to go through it all the way through just so you can see what the results are. Then I'm going to backtrack and include the side hustle for the husband and wife. Once I include that, then you'll see the difference that plays into you having a side hustle, and hopefully it paints a picture for you. And if you do not have a side hustle, or you have one and you just don't understand how to best benefit from it, then I'm also put a link below so you can get access to a system, pretty much a financial membership that can teach you how to best use the side hustle you currently have, or adopt one that teaches you these things so you can be in a better position financially and not just have a side business and you're just trying to make money but you don't understand how money works. So I'll include that down below so you can take advantage of it and become a part of the membership that teaches you how to build wealth, not just hustle. So that being said, right here on this first page, you'll see the About You section. As I said, they're married, filing jointly. So I'm going to blow through this to the best of my ability. May another taxpayer claim you as a dependent? The answer is no. Do you have Do you plan to claim dependents on your tax return? In this scenario, no. Do you or will you or your spouse hold a job this year with paychecks from which federal income tax are regularly withheld? Yes. How many jobs do you expect to hold this year? 1. Both parties plan to hold 1. How many jobs does your spouse expect to hold this year? 1 for them as well. Will you or your spouse receive an income from a pension this year? No. In this other section, we're going to leave this blank, but if it's anything that you're in question of seeing if you qualify, you can always hit the question mark and it'll elaborate on those things. But for the sake of time, I won't bore you with those details, but hopefully if it fits you, you recognize it. Then we just hit next, and now it's getting into the job. Do you expect to hold a job this year or the entire year all the way through December 31st? Yes. How frequently are you paid? And we're going to say that these people are paid twice monthly. So that's the 1st and 15th, the 5th and the 20th, and that's different from being paid every 2 weeks. So hopefully you know the difference as it relates to your job. Every 2 weeks is like every other Thursday, every other Friday. Twice a month is like specific dates. 1st and the 15th, 5th and the 20th, just as 2 examples. On what date did your most recent pay period end? We're going to say the most recent pay period ended on February the 5th. Just throwing something out there. Enter the total wages you expect to receive this year. For the first person, we're going to say that this person expects to receive, we'll say $52,000. They expect to receive $52,000 for this year. Enter any bonuses. No, we won't put anything for the bonuses that they, basically is just the IRS way to tax any additional money that you bring in. Use your last pay statement into the federal income taxes withheld. In this one, we'll put year to date. So how much have you paid in all year? In this case, we're going to say that this person has paid in, we'll say that they paid in $1,000 year to date. Matter of fact, yeah, we'll keep it at $1,000. This is just an example. So your scenario should be totally different. So $1,000 that they paid in year to date. Then you'll look at the per pay period. So on a per pay period basis, we're going to say that this person is paying in about $340 per pay period. Now I know that math may not add up identically, but you get the point. Did you or will you contribute to a tax-deferred retirement plan such as the 401k? In this example, we're going to say no. Did you or will you contribute to another form of something that can lower your tax liability, such as the HSA, FSA, pre-tax child care, or other cafeteria plan? We're going to say no on this one. Then let's fill it out for the spouse the same way. Does your spouse expect to hold this job all year? Yes. How frequently is the spouse paid? We're going to say twice monthly on this as well. On what day did your spouse's most recent pay period end? We're going to say the 5th as well. Into the total wages your spouse expects to receive this year, we're going to say that this spouse, okay, we'll keep that $35,000. They expect to receive $35,000. Any bonuses? No. We'll leave those blank. Year to date, using your last pay statement into the federal income taxes withheld from that particular spouse. We're going to say year to date, this person has paid in $700. Per pay period, we're going to say that they pay in, let's see, they pay, okay, in that case, we're going to say that they have paid in $750, and per pay period, about $250 a pay period. We'll just leave it at that. Did you or your spouse contribute to a tax-deferred retirement plan such as 401k? On both of these, we're going to say no again, as we did on the last one. Adjustments to income. On this, you can see adjustments, see what you qualify for, but we won't put anything here. We're just going to actually hit next, but we'll come back because this is where we're going to incorporate the side hustle. Right here where it says certain business credits. If you look deeper into this, you'll see that it fits people who have a home-based business in many cases, so we'll come back to that. Deductions from income. Deductions reduce the amount of your income subject to income tax. Most taxpayers take the standard deduction. In this case, we will. The standard deduction for a married filing jointly couple is $25,100. So if your itemizations don't equate to more than $25,000, it's in your best interest to just keep the standard deduction. On this form, it's going to make you keep that standard deduction anyway. But if you itemize, then hopefully you know if you pay more in itemizations than the standard deduction allows. But in this case, we're going to say take the standard deduction and click next. tax credits. Tax credits are amounts you subtract directly from your tax obligation. Would you like to learn more? And you can click to see what fits you, and we'll just, just let you see it, just so you can see that there are certain things that give you additional tax deductions, because there are a lot of things that help you minimize your taxes. The problem is a lot of us don't want to dive into it and understand it, and we just pay or overpay in taxes. So we're going to say get my results without tax credit, just so we can see what the results are for this couple scenario. Now, the estimated overpayment is $7,107. $7,107 is what they'll end up getting as a refund based on this scenario. Now, I typically would play with this, but basically it says if you're happy with your results, don't change anything. Now, we wouldn't recommend this, but I want you to see something. I am going to play with it. In this scenario, a person is going to get a refund of about $7,000. What if they got that $7,000 throughout the year, which is what we teach in that membership that we highly recommend you get access to, even if you have a business. It's a business within itself because you can position yourself to teach financial literacy or empower people by understanding how personal financial success goes hand in hand with having a home-based business. So it's a business, but it does not compete with your business. It complements it. So even if you're in business, this gives you a tool, a vehicle, a membership that complements their business, because many people who are in business have no clue how to maximize their tax liability or their tax deductions so they can maximize their take-home pay at their job, as well as pay little to no taxes legally by understanding the tax deductions that come along with having a home-based business and having software that validates and keeps records of the receipts and expenses that you're paying in on a day-to-day, week-to-week, month-to-month, year-to-year basis. So in this case, let's say that this person said, you know what, I don't want to get a $7,000 refund. I want to get more of that money throughout the year because I have debt that I want to pay off, credit cards I want to pay off, and you know what? I'm learning in this financial membership the importance of investing. I want to grow my investment portfolio so that I can position myself for early retirement. I'm using my job and my business to get me towards a place of building wealth and retirement. I want to get some of that money throughout the year. And I'm just going to say, okay, say this person, because they've already paid in some years, so there's no way that they can pay in zero because they've already been paying in a certain amount. But let's just say that they want to get a $2,000 or $2,100 refund. In this case, it says to get your desired refund amount, you will need $252 withheld from each paycheck, $88 less than your current tax withholding. And then your spouse, to get the desired refund amount, you would need $88 withheld from each paycheck, $162 less than your current withholding. So what that means is when they say $162 less, that's the amount that's going to be going back into your pockets. So if they get paid twice monthly, you can double this number, and that's how much is going to be coming back into their household. So 88 times 2 is a little bit under 180. So you're looking at 176 in terms of extra coming into this first income earner's pockets, 176. Then you're looking at this 162. So you multiply that times 2, we're looking at 324. So 324 plus that 176 is $500. $500 that comes back into this household. Now imagine that $500 going towards debt elimination. Imagine that $500 going towards investing. Imagine that $500 going towards saving. All because they decided that they didn't want to get the largest refund. And this is legal, and they're still going to get some form of a refund. They're still going to get a $2,100 refund, but now they got an extra $500 in cash flow to incorporate into their strategy, all because they use this to their advantage. Now, what I'm going to do is I'm going to go back and incorporate the business deductions that come along with it so you can see how they can have even more cash flow. And this is even if the person wasn't planning on getting a refund. So this could have said that they wouldn't have received a refund of nothing but $100 or zero. If you go back and incorporate those business credits from having a side hustle, you position yourself to either get a larger refund or get more money back into your paycheck. And I'll prove it to you. So let's go back to the adjustment section. And I told you we were going to scroll down here to this bottom part where it says certain business credits for basically people who qualify for additional tax deductions. And I won't go too deep into that. So in this scenario, and let's see, who are we dealing with? See, adjustments. Okay. Like I said, on average, people are able to minimize their taxes by $6,000. So this already in here. Now, $6,000 it's simple to obtain. Many people are paying $100 a month on their phone bill. If you position your phone bill to get paid off, or position your phone bill to be basically a tax deduction, then think about how much they can add up over the year. But let's talk about tax deductions that come from you driving your vehicle, because many people drive their vehicle, but they're not getting tax deductions from it, and it has to all be going into your business. Usually a person is able to get 50 cents per mile that they drive pertaining to their business. Well, if people drive 12,000 miles in a year, which is a somewhat average number, that equates to $6,000. That's just off of business miles. That's not even including money that you may pay, or if you hire your kids. That's not including paying your phone bill. That's not including paying for internet service. That's not including marketing that you may pay for advertising or material or products. That's not including any of that. So 6,000 is a low ball of a number. I just want to paint a picture here. So then we're going to hit next, and we'll take the standard deduction here. Now that's $6,000, and that's across two individuals. And you see how it changed some. So it went up to where the overpayment went up to $78.27. Now, before I even mess with this, I'm gonna go back to it again, and I'm gonna double that number, because we're gonna assume that both parties have a home-based business. We're gonna assume both parties have a home-based business. So, and they both get $6,000 each from their home-based business and additional tax deductions to lower their tax liability again. And keep in mind, this is not dollar for dollar. It's not you're lowering it by an exact $12,000, but it is usually 50 cents on the dollar in a sense, to the point where it might look as though you made together as a couple $87,000, but they can't tax you on the whole $87,000. For one, you get the standard deduction, which lowers it by $25,000, and you get to lower it by another $6,000. So you're lowering it by $31,000. So instead of them taxing you $87,000, they're only able to taxing you on the $87,000 that you made as a couple. They're only able to tax you on $56,000. So now you might even change tax brackets, or you might even position yourself to get more money back throughout the year and do great things with it, so you can start building wealth. So we're gonna go next, see the results, and boom, let's see what they bumped it up to. Now, based on two people who have tax deductions, and this is just keeping it real minimal, just kind of being modest, not overdoing it, not overthinking it. $8,500 is what they would get in a refund. $8,500. And some people will be pleased with that. Or you may be of the belief that you want to take that extra money and bring it back into your household, and you say, you know what, I'm going to still set myself up to get that $2,000 refund as shown below, as shown before. So we'll go ahead and keep it at $2,250. So what that means is, instead of them getting an $8,000 refund, they're going to get a $2,000 refund, and the rest of their money is going to come back into their household. They can be reinvested into the business, tax deductions. They can be invested into them paying off their debt, paying less in interest. They can be put towards saving, stashing accounts. They can be put towards investing, wealth building. And this is a powerful concept if you understand it and adopt it. So what happens here once they incorporate these numbers? To get your desired refund amount, based on me sliding and saying you want a $2,250 refund, to get your desired refund amount, you will need $204 withheld from each paycheck, which is $136 less than your current withholding. Remember, they're getting taxed, or they get paid twice a month. So this number is actually double for the month. And then on this scenario, the person is going to get $179 less withheld from their paycheck. So basically what you got to understand is this: if you double these numbers, they go from $500 being or $500 in cash flow to now being able to bring home even more. So let's do some quick math. 180 times 2 is 360. 136 or 130, I'm just round, times 2 is 260. So 260 plus 360 equals 620. So now they went from bringing in about 500 to about 620 back into their household. Back back into the household just by strategy alone, and they're still going to get a refund. So think about that. Bringing in an extra $600 back into your household off of strategy can be money that you use to build wealth. Do not take that lightly, because many people don't realize that investing an extra $600 over time can make you a millionaire by the time you retire. Many people don't realize that having an extra $600 can make you debt free 15 years sooner, all because you incorporated this. So hopefully this helps the person who asked the question. And if you want to know how to fill out your W-4, once you get here, it basically says, hey, how to adjust the W-4, and it tells you what to do in terms of your spouse. You can print it out so you can, turn it into your employer, or you may be able to update it into the system, and you'll do the same thing for the other spouse based on the scenario. Print it out, fill it out, and now once that's filled out and adjusted, you will benefit from the increase in take-home pay. That increase in take-home pay can be applied strategically to better your finances and ultimately build your wealth. And if you do not have access to the Personal Financial Success membership, which we highly recommend that you get the elite membership, then click the available link down below so you can take advantage of it and start implementing this stuff. We got tools and software to where you can plug in your debt elimination game plan, your investment game plan. So now you can take these numbers and literally put it into the system and know exactly when you're going to be debt free. Know when you can achieve X amount in your investment portfolio and be a millionaire, or have $500,000 into your investment account in real numbers just by taking this extra cash flow and applying it. That ain't even including the income that you may make from your business, and of course that'll offset your tax liability, but that extra income can also be funneled into your game plan as well. So this is just an example to let you know the power in the W-4 if you have a side hustle, because it'll offset the money that you earn from your job, helping you keep more of your hard-earned dollars. But we suggest that you take that extra money and apply strategically so you can build wealth. That's all I got for this video. Mr. Smith, signing out. Salute.